direction of the market. Now, let's have a recap of the bearish scenario, but this time include the discount and premium concepts. This time, we're adding the concept of the premium and discount. In this case, the market is in a downtrend. We don't want to jump in right away. Instead, we wait for a correction to pull the price back up into a premium zone, which gives us a better entry and increases the chance of a successful trade. Once price enters this premium area, we apply the CRT model. But this time, we only focus on bullish candles within the correction. Just like before, we mark the high and low of each bullish candle and wait to see how the next candle behaves. If the next one breaks and closes above the range, the setup is not valid. But if it sweeps above and then closes back inside the range, we have a valid CRT signal in line with the bearish trend. To improve the entry, we zoom into a lower time frame and wait for a fair value gap to form right after the sweep. Then, we place our sell order at that gap and set the stop loss above it. Again, we can take partial profit at 1-to-1 and let the rest run toward the next major support or liquidity zone. By waiting for a pullback into a premium area before applying the CRT, we combine three powerful elements: trend direction, manipulation, and entry from a discount premium zone, giving us a clean, smart, and high-probability setup. Now that we've gone through how to apply CRT properly, let's quickly look at some common mistakes traders often make and how you can avoid them. One big mistake is trading CRT during a choppy market, where there's no clear direction. CRT works best in trending conditions where you can clearly identify impulse and correction legs. Without that, the sweeps can become meaningless. Another common issue is entering too early. For example, taking a trade just because the price reversed. But that's not enough. You need to wait for a proper liquidity sweep, followed by a close back inside the candle range. Wait for the candlestick to complete. If you enter before that, it might continue pushing downwards again. Traders also often forget about market context. Even a perfect-looking CRT setup can fail if it happens right into a major news release or near a strong higher time frame level like a daily resistance or support. Always check the bigger picture. Avoiding these simple mistakes will help you get much more reliable results with CRT. Now, in the next part, let's look at some real chart examples and see how we approach different market scenarios. So here we have Eurodollar on the 1-hour chart. We are going to take every CRT trading pattern we spot during the backtesting. Let's begin. By breaking above this swing high, the latest price action shows that the bulls are in control and we are in an uptrend. So, we are only interested in buying opportunities. Therefore, we are going to apply the CRT model to the bearish candles. Here we have our first pullback candlestick. We mark the highest point as candle range high and the lowest point as candle range low. Now the only thing we want to see is that the price breaks below the CRL and returns back inside the range. But if we get another bearish candle completely breaking below the CRL, then we will skip the trade and keep looking for the next setup. So let's see what happens when the next candle forms. Here we can see that the price penetrated below the CRL with a wick and closed back inside the range. So with our range candle and sweep candle formation, we will look for a long trade and expect the price to complete the CRT model with an upward move. But the question is, where do we enter the market? To execute the trade, let's zoom into the 5-minute chart to set our entry. Here on the 5-minute chart, we can observe much more detail. This is our latest impulse that swept the liquidity and closed back inside the range. So right now, the only thing we need is to find a bullish fair value gap area to enter the trade. If you focus on the latest move, you can see that it has already created an FVG and is currently being rejected by the price. So everything is ready to open a buy position here and set our stop loss in a safe place. Now for the targets, as mentioned before, we always close half of the position when the price reaches our 1-to-1 target, and for the second half, we let the profits run. Even if we miss this trade, see how many times price created FVGs along the upside move and gave us trading opportunities. So here we had our first successful trade. But let's continue on the 1-hour chart to find more setups. Here, once again, we have a bearish candlestick formation where we can apply the CRT model. we mark the high and low and wait for the next candle to close. Once again, sweep forms. Let's zoom into the 5-minute chart to enter the trade. On the 5-minute chart, we can see that the price has already formed multiple fair value gaps. We will set a buy limit at the lowest FVG because it's located in the discount zone, giving us a better risk-to-reward ratio and a safer stop-loss placement. We use the same exit rules as in the previous trade. Now let's see what happens. The price triggers our buy limit, hits our first target, but then reverses downwards, and eventually hits our stop-loss. However, since we closed half of the position at the 1-to-1 target, we ended up with a break-even trade. So we didn't lose any money and got out safely. Still, let's zoom out to the 1-hour chart to find more entries. Once more, we can see a big bearish candlestick where we can apply the CRT model. The following candle sweeps the liquidity below the candle range low, and once again, it's time to zoom into the lower time frame to execute the trade. With the sweep candle formation on the higher time frame, the only thing we want to see in this lower time frame is a bullish FVG forming, so we can set our entry. So let's move forward. Here we have a small FVG, so we set a buy limit with a relatively larger stop loss. Following that, we have another FVG formation. So, without canceling the first trade, we set up another one. Once again, we get a great winning trade. Of course, this was just backtesting, and fortunately, we found multiple successful trades. But that's not always the case in real trading. However, this was just to show you how we approach the market in different scenarios. So guys, I hope you enjoyed this video. If you did, please hit the like button to support our work. And also don't forget to share your ideas in the comments section. See you in the next video.